I guess to kick us off, Stroud, maybe give us a bit of background on your like academic and like career progression. Maybe like kick us off from like what you picked at A levels and why and going on.
Yeah, sure. So at A level, I studied double maths,
Yep.
economics, and physics. So four
Okay.
A levels.
Yep.
Um, I'm not sure there was a huge amount of thought behind it in terms of what career does this then enable.
Okay.
Um, I was just
So why
quite
did
good
you
at
pick
maths.
those? You were just good at okay.
I was good at maths.
Yep.
Economics, I quite liked the teachers and vaguely thought I liked business. And
Yep.
then physics, I thought I should do something scientific and hugely regretted it because I was terrible at physics. So
Really?
yeah. So then when I was thinking about university, it was like,
Wait, just there
I,
before you start there. Just before you start there.
yeah,
That's interesting though, because I actually tell everyone like I've seen videos of like Elon Musk and stuff talking about how physics is like the best degree to do because it tells you about like it gives you a good picture of working out problems and like problem solving and like things like that. But what? Why do you? Well, you weren't good at it, but do you still think it's useful?
I think it's useful. I think it's useful because you think about the building blocks of the world. You think about energy and
Yeah, yeah,
um, I think most people that I interact with now in the professional world have studied physics. They're
right.
very good at doing this thing called thinking from first principles. So
Okay,
rather
okay, okay,
than
okay.
I don't know, I'm very prone to if I get a problem, I'll go on Google and I'll try and work it out from
Yeah,
reports and
yeah,
all
yeah.
this. They sit there in a dark room and think from the building blocks up and come
Yeah,
to their
yeah,
own
yeah, yeah, yeah.
conclusion, which I'm trying to get better at. But I think that
Mm.
discipline and that science really kind of forces you to do that.
Okay.
Um,
Okay, sorry, I cut you off. So you then said thinking about university.
yeah, so in university, I knew I wasn't going to do maths, so economics really was the only option.
Right.
Ended up getting into University of Warwick,
Yeah.
where I studied for 3 years,
Yeah.
and then on that 3 year journey, um, I very early in my first year managed to get onto the spring week at HSBC.
Ah,
So
right. Okay,
I
okay.
knew nothing about banking,
Yeah.
but I was a sportsman, and so I was competitive, and everyone was going for these things. So I was like, you know what? If you can do it, I can certainly do it. Ended up on
Hear
that
about the
that
spring week.
treadmill. Was that
How did you hear about the spring week?
we had the economics had so many people who loved finance in that course, so it was just lectures and
Your
announcements.
colleagues there. Okay.
Yeah, yeah. So ended up on the spring week to summer internship to then landing a grad role at HSBC in the
Okay,
M&A
amazing.
team.
In the
Yeah,
M&A
so
team. Okay. Okay.
yeah.
And tell us about that because I know about your experience in the M&A team and stuff, and a lot of people's experience at M&A team. But like that, how long did you spend
So I quit after 10 months.
there? Okay. um, don't quit, Stroud. Okay, tell us why. Why was it only 10 months?
um, to be honest, I think in hindsight, I would have told myself to reflect on my internships. The internships is a very rose tinted view of what banking is because they're treating you well. The bank are courting you to become an analyst, right? They pay you well, and the hours aren't bad. And I think fundamentally, when I just got into the environment,
Yeah.
I didn't find the work particularly interesting in my team. There's a lot of like process pushing and building decks and actually building financial models was interesting and that served me quite well going forward. But
Just for like students and things who are listening to call by process pushing and deck shooting, you're just building PowerPoint slides.
yeah, so M&A advisory is big public company is buying another public company
Yeah.
and you act as a middleman advising either the seller or the buyer. And so
Yeah. Okay.
there's a huge amount of like valuations work, negotiation, like building an equity story around why this company should be bought.
Yeah.
And then there's a whole load of legals and just process, right, to move things
Yeah.
along
Yeah. Okay. Perfect. And then so the work you didn't find super interesting, and the hours I'm sure you didn't find too interesting either.
the work was relatively interesting. The hours, yeah, were just a killer. And then some people can do it. Don't
Yeah.
get me wrong. I have friends that
So
have,
what were
been
the hours?
5 years. I would be at my desk at 9 a.m. and depending on how busy it was, you could be leaving anywhere from midnight to 3 a.m., 4 a.m. in a taxi home, sleep back in for 9. So it's okay every now like on a one off or maybe a few times in a week, but for me it just compounded and I became you layer on top no sleep with eating Deliveroo every night, and it's just
Oh, that's a good.
recipe for disaster, I think.
Well, so, yeah, my friends, other friends in M&A have said this, but it's just crazy. Like, I mean, what are you doing from like 9 p.m. to 3 in the morning? Like, just building PowerPoint decks. Like, you're like a
Yeah,
zombie.
I think the mechanics, like why it's happened, why the industry's evolved that way, is because fundamentally banks have all the same information, and when
Mm,
you all have the same information, you compete either on relationships or you compete on speed.
mm.
And relationships is so. So most banks
Mm.
default to just getting stuff done quickly, which means you're
Right,
just
right, right. Okay, clear. Okay, so M&A, cup of tea, but there are obviously people who have stayed in there for 4 or 5 years, who have plugged away, and the hours obviously get better after the first couple of years and things. Um,
yeah.
so what happened after leaving there?
Yeah, so I took a bit of a leap of faith, joined a predictive analytics startup called Applied Predictive Technologies. Honestly, didn't know what it was, but one of my best friends worked there and really said it was, great people and interesting work. And what we did was we sold, like simply put, a data platform to large retailers and large restaurant chains.
Interesting.
Whereas these people are, 30, 40-year people making decisions at the top based on gut
Right,
feel. We allow
right.
them to like properly construct real-time data pipelines, run
Ah,
and
interesting,
start.
interesting.
So I would frame it as like micro consulting using data, like over the engagements are over years rather than like a sprint of a 6-month project.
So what did you say restaurants there, by the way? Or
Yeah.
retailers, did you say?
So the core was restaurants and retailers.
So what kind of technologies are you giving to restaurants? Something like an open table or things like helping them see which customers are coming in more often, that kind of data, or what kind of data would you be providing?
I didn't personally work with a restaurant chain, but for example, all of their open table data, we would construct pipelines that would extract that data, clean it, transform it, and put it all into a centralized
Okay.
database, and then provide like the tools on top for them to analyze it properly. Whereas
Okay,
before
fine,
they're like
fine.
hacking around in Excel and so on.
Okay, fine. Okay, so then you go from there to then, and that's kind of where we reconnected again when you were in this phase of I want to move into venture capital. But what? Okay, I guess when did you start thinking about venture capital, and how did you make that move?
Yeah, so I guess just to tie up the story with APT,
Yeah,
that business ended up growing like exponentially, and it was bought by Mastercard, and so I was on that
okay,
journey of fast growth, servicing clients across multiple countries, and then was brought back into Canary Wharf with Mastercard.
right.
At Mastercard, it wasn't the best fit, as in I'm not sure they really understood the acquisition and where we would fit within the Mastercard organization.
Right.
So I did a couple of things, helped out with a few different teams, but I very much knew I was at a crossroads and there was something that was going to come next.
Okay.
So I just started speaking to people, to be honest.
Hmm.
I attended this thing called Startup Grind, which I think is still going. And they do
Okay.
events in town where they bring in a big entrepreneur, they have a panel audience, and then he or she talks through their story. And one of them was the founder of Octopus Group.
Oh,
Uh,
interesting.
yeah, a guy called Chris Hulat. So he was talking about how he started Octopus as an investment firm and it became an energy company, real estate company. And I think in that conversation, he talked about venture capital and I started attending a couple of tech meetups.
Mm.
And honestly, how I got in was a LinkedIn post.
A LinkedIn post.
Yeah.
What
It
do,
wasn't, it
what
was
do you mean?
nothing
What do you mean?
clever about, as in Concentric posted a job description on LinkedIn. I read it. I thought it was interesting. I applied speculatively and they got me into a first call.
Yeah.
And then once at that moment, I realized, okay, this is actually a good opportunity. And I started really hustling around to meet people in the industry to learn as much as I could for the interviews. And
Okay.
that made it.
Oh
Yeah.
wow, that's super interesting. Okay, I guess the question is there might be people, students who you know like the idea of startups, like the idea of venture capital and things. Is there a faster route to venture capital? Like I mean, last week we speaking to Upen, like And like you had at HSBC, you go from spring week to graduate program and you stay there for spring week to summer internship, then graduate program, and you stay there. With venture capital, is there those kind of programs like spring weeks, summer internship stuff, or is it not structured?
Not particularly. I'd view it as like a private equity firm. So like
Okay.
you know how most bankers then go into private equity after 2-3 years.
Yeah, yeah,
Um, I think you need a certain number of skills and experience to be able to like hold down an analyst role.
yeah,
Just because the teams are so lean, it's not like you can kind of be coached along and
yeah,
really carried by the team. Like my team, for
yeah,
example, is only four people, so everyone
yeah.
has to be able to pull their weight, and that's why I think a bit more experience and having seen something first.
Okay,
Uh,
okay, okay,
which
okay,
might
okay,
work.
okay.
But to be honest, saying that there are some programs like Diversity VC, Future VC. There's one called Included VC. There are some
Diversity
programs
VC,
for students that want to.
do you know the main guy, just as a sidetrack? Laddie?
No, I don't.
Laddie, okay, okay. Oh, but I heard about Diversity VC for the first time because he came and did a talk at LBS a couple of weeks ago, actually. Okay, so not as structured as banking or things like consulting, where you've got spring weeks, then summer internship things. But I think that's actually a valuable thing for like people to hear is these like consulting roles, these investment banking roles, like you get into it, but it's not the end. Like you said, like you work at investment banking for 2-3 years. A lot of people are then going into private equity. Well, you work in consulting for a few years. We've got a chat actually with someone in consulting in a couple of weeks, and they then move into private equity or like investment banking, you go into venture capital. So you kind of have to do something before you go into those roles. That's fair.
I would say so that I have seen the odd person that has managed to break in at
Okay.
post grad level.
Okay.
I think it's easier if you've studied something niche. So as an
Okay.
economist, I think I would have struggled to get into a venture capital firm. I know
Yeah.
some people that studied biology and life sciences VC is huge now.
Uh,
So you
right,
have
right, right.
or you're a dropped out doctor who didn't want to go
Yeah.
in practice, but you go to a
Yeah.
health VC because you have a grounded opinion of that sector.
Yeah.
Um,
I heard someone who was a
yeah,
vet who then couldn't practice anymore and then became a VC because they had
yeah,
specialist knowledge, like you said, in one field. And then if a company comes along that is very niche, like who's better to understand it than them?
exactly. And I think that this is why it's so hard to get in because every team is also different. So
Yeah,
that
yeah, yeah,
vet
yeah, yeah,
may have plugged the gap or had a different take on the world than the other 5 people in that team.
yeah,
And so
yeah,
you've kind of just got to do the hard yards, understand, map out the different funds, try and understand where you would fit in, and then just
yeah, yeah.
try and get a connection to someone at that fund and get in front
Okay,
of them. I
okay.
had a person send me a pitch deck of themselves. It was the most outrageous thing. They sent me a 6-slide pitch deck of this is Concentric, this is what you do. It was an org chart, and it was like I fit here. This is what I'll bring, and it was a company pitch deck, but for themselves in a role. And it
Oh, what?
honestly, it
Oh,
really,
what? Oh, this. Oh, this is when you were at Concentric. Someone sent
yeah, yeah,
you
yeah, yeah.
apply for a role like that.
And it was just different. It was different. It stood out like amongst the sea of emails. I read it and I reached out to the guy and we had a coffee. And he's now landed, unsurprisingly, a role at another venture fund. But I'd say,
So
yeah,
being
just
slightly thinking outside the box, it helps getting into these kind of careers.
definitely helps. Yeah, I think
Okay,
you need
okay,
some sort of personality and if you can show some hustle, it's appreciated.
okay, okay. Um, okay. Let's dive a little bit more into VC. So what do VC firms actually do in the newsletters about Deliveroo this week? I've done my best to kind of explain it, but it'll be good hearing it from the horse's mouth. Maybe in like a 30-second, 1 minute pitch of what VCs actually do.
Yeah, so it's I think about it like professionalized Dragon's Den. It's probably the easiest way that anyone can understand it.
I like
Like
that. Yeah.
individuals, corporates, financial institutions, and governments give a VC fund money to invest,
Yeah.
often in high risk, early stage technology businesses that are still loss making and have a high chance of failure.
Yeah.
The VC gives the money in exchange for a percent of the business. Over 5 to 10 years, you support the business, and hopefully you exit and make a X return on your money after that period.
By exit, what do you mean?
So a business can list on the public markets via IPO,
Yeah.
for example. They can be acquired by another business. or you can be bought out. Your stake can be bought out by another fund, like as part of a
Yeah.
funding round or as part of a
So
secondary
if I'm a
transaction.
VC that invested in Deliveroo, like I get my return when Deliveroo IPO, because then the shares I can sell my shares.
Yeah, exactly. That's the
Yeah.
ideal. As
Yeah.
yeah,
Okay, perfect. I guess what kind of things are you looking for as a VC fund? Like now, when you're investing in companies, you get given, you told me like tens of pitch decks a week and things. Like, what are you looking for in companies before you invest in them? What kind of things are you looking for? Because, like you said, a lot of them are loss making, and I'm going to come on to that in a second because I find that incredible. Because obviously, investing in public stock, because like you rarely see companies that are loss making, and if they are, you're not. I'm not going to touch them. But you guys are dealing. It's a very different type of investing. What kind of things are you looking for?
I think generally VCs are looking for outsized returns, and so like we don't need to get into the weeds. And happy maybe you can write a blog on it, but the
Mm,
VC fund model essentially means that every company you invest in
mm,
has to return the fund. And so
mm,
if I've invested £1 million in a company valued at 10 million, and I've got
mm,
10% of that business, and I have a 50 million fund, that
mm.
1 million has to become 50 million. Okay.
Right, right.
So the 10 million valuation has to times by 50
Yeah,
to get there. So the business should exit for like a minimum of 500 million.
right,
And
right, right, right,
so
right, right.
that, I think if you start from the economics of the model, you then have to think the business I'm backing, is the end market big enough? Is the
Yeah,
founder
yeah.
going to take it to that size? Does he have a credible route to building revenue, that is appropriate for a 500 million plus business?
Right, right, right,
Um,
right, right.
and the reality is there are so many good businesses that cash generative, that are profitable, that just because of the market dynamics won't get there. And that's
Yeah,
okay. And
yeah.
they don't need venture
Because
capital.
the end market is not big enough.
The end market's not big enough. Maybe it's just a copycat model. There's too much competition.
Yeah,
The margins are thin. Many, many reasons. Maybe
yeah,
the founders just not cut out to build a business at scale.
yeah.
Um,
Okay. It's interesting because these are the kind of things that, like you said, you professionalize Dragon's Den. It's the kind of things they talk about on Dragon's Den, though. Like, how big is your end market? Like, what could your sales numbers be in a couple of years? And stuff like that. So that's what they're looking for. Okay, what?
Dragon's Den are clowns, by the way. On the whole, they're pretty unsophisticated investors versus the institutional market. The Dragon's Den, one, I don't think they actually complete the deal. Sometimes they'll say like I'll invest blah, but behind the scenes they don't actually do the deal.
Yeah. I read that a couple of weeks ago, and I was like, I didn't realize that. Like you said, it's very different to what you see on TV.
Yeah, yeah. It's a bit of a wild west, I think, Dragon's Den, but VC is
Okay,
it's still a bit cowboy, but it's yeah, I think it's more professional.
because it ends in 10 minutes. Well, okay, we'll have a think. Okay, so what things Deliveroo? Okay, let's say you were a VC back years ago, or so, and Wilshu and Deliveroo came up to you. What things would have been attractive and less attractive for you when Deliveroo pitched to you?
When they pitched back in the day,
Yeah, I
interesting.
mean, it's
Okay,
very easy. It's very easy to say now because obviously they're much bigger. But like, what things would have stood out? Maybe a couple of pros, a couple of cons.
I think when you think of the food delivery model back then, I can't remember exactly when Deliveroo were built, but it was like the fish and chip shop, right? You have to ring them up
Mm.
on the
Yeah, yeah,
phone. You know your local restaurant, you know the owners, and
yeah,
they send their uncle to come and deliver it to you on a bike.
yeah, yeah,
And so like fundamentally, that business can never really scale
yeah,
as a local business. So the
yeah.
idea that Deliveroo becomes the consumer portal where I discover loads of restaurants, I can easily order,
Mm,
and then they offer the courier service. So they offer the
mm,
logistics as well with their own riders.
mm,
I think that fundamentally changes the way we do takeaway. It makes it
mm,
easier, it makes it cheaper, makes the consumer experience better.
mm.
And so as a VC, especially if Will Shu, I know he's quite big personality as well. He had a big
Mm, mm,
vision. And so it's
mm.
easy to then understand, okay, this is the guy to change this market.
Right, right,
Um,
right, right, right.
and you would have, I don't know the numbers off the top of my head, but obviously the food delivery space, even pre these, mobile ordering days was enormous.
Yeah, yeah.
If Deliveroo could even take a small percentage of that market, they were going to be a big company.
So you're thinking, all right, Deliveroo, let's say they came to you and said, oh, we're working with 20 restaurants or something at the moment. This is the benefit we're providing those restaurants. This is the benefit we're providing consumers. you're then thinking, even though they're losing money, the food delivery, like takeaway business is so big that if these guys keep going, like it could easily, you're saying that 50 times, it could easily 50 times.
Yeah, exactly. And I guess in those early days, it's all around, one, is the founder just talking, or is he shipping product?
Yeah.
and two, are there enough proof points from the market that this is solving problems? You're looking at those growth rates. You talk about he signed 20 restaurants.
Yeah.
I would want to come back to him 2-3 weeks later. He's suddenly got 50 on there.
Yeah.
So you're trying to spot that point of inflection where this isn't just one person hustling around and just manually onboarding all these people, but word is starting to spread that this is a game-changing thing, and people are coming to him, and the whole business.
Word of mouth is driving a lot of things.
Yeah.
Okay. How much of a worry is it? Not profitable, because this is what we talked about in today's newsletter. Is investors give, as you said, give him money, give him a stake. They've IPO'd now, so investors have done well from their investment in Deliveroo. But like some of the later investors, or like the public investors, they're still waiting for the company to turn profitable. No, like how much of a concern is it that they're not profitable? And what are your thoughts
there? I think the big change in the last couple of years has been the market shift. So whilst interest rates were near zero, money was cheap. Money was cheap, and so it was a no-brainer for businesses to lend and just throw money at growth. And so this mindset of growth at all costs was rewarded by VCs. It was rewarded by public markets. Now interest rates are what, like 4 or 5%?
Yeah.
Due to go up. That means the cost of capital or deploying any money is that much higher. The bar is that much higher. And so actually it's not a nice market for founders, because almost overnight, VCs are saying to founders, grow. And then overnight was grow, but grow profitably. And that's operationally, that's a completely different mindset to be in. And so now just to kind of close the loop and to answer your question, now it is much, much more of a concern for VCs that this business has a path
so for Deliveroo themselves, it's not that huge a concern then, because they're not, it's not VC backed, like they're a public company. But I guess the concern is, they've only got X amount of cash left. Like they need to start making money, otherwise that money's going to run out.
Yeah, I think they can always raise more money in the equity markets. I mean, you work in equity research. I'm not exactly sure how that works, because I've never been at that level of the market. But I mean, it's publicly run company. There's a lot of analysts looking at it. There's a lot of reports all the time, and the stock hasn't performed well over time.
No.
I was looking at the graph, but I think if they manage to show profitability, their stock is going to bounce. Like Uber's, for example, a couple of months ago, or Lyft.
Clear.
So
Okay, perfect. So that's great to get your thoughts on Deliveroo. Just a final kind of question about VC, your experience, and then we'll move on to some advice and things going forward. Like, what do you enjoy and maybe not so enjoy about the role? If we talk about pay, hours, how intellectually stimulating the role is, and things like that, for people to get an idea.
Yeah, I think this is important. Actually, I'm going to focus more on the negatives, because VC has become this like glamorous role, and I think it's important to paint a realistic picture. What I enjoy is you are paid to be meeting some of the most interesting people every day, who are and learn about the problems that they have devoted their lives to, and they're using technology to solve it. So they're solving these problems in a new and innovative way. And I think constantly being around that is intellectually stimulating. It's inspiring. The downside of VC is it's extremely unstructured. I'm part of a team, but we're all kind of individual investment machines trying to build some sort of track record as an individual. That means it's often pretty lonely, right? Like when I was at startup, we had a team of 50 young people all pushing towards one goal together. We all had that common goal in mind. And playing team sports, that's great to be around. When it's just you, it can become slightly lonely on that journey, I would say.
Right.
There are obviously ways to counter that. And probably the last thing I'd say is it's hard. It's really hard. Like the feedback cycles, I can make an investment today, and I
Yes,
won't know if it's successful until 10, 12 years down the line.
I think
Even
that's
if it's
crazy. Yeah.
if it's successful, is it the case that the market timing was good, it was lucky, or was I a good investor? If it
Yeah.
was
Yeah.
bad, is it the case that the market just turned against that idea because of COVID,
Yeah.
for example?
Yeah.
And
Yeah.
that's something you can't forecast. And so there's a lot of noise. You don't know if you're ever good at the job, but you're just constantly trying to learn and back good people trying to solve important problems. So
Okay.
that's
I find that super interesting, and it's a really good difference actually. You point out there, like if you invest in a stock, like you might see the reward in that because a lot of public asset management companies, and we're going to talk about asset management company in a couple of weeks. But you invest, their horizon might be 18 months, so you'll figure out if you're correct or not 18 months or sooner. Whereas you guys, you're waiting 10 years. So yeah, okay, interesting. Your VC and your kind of experiences, maybe just to like help who are at school or university at the moment. This section is kind of for that, but like, what books have you read, like since you've left school, graduated, that you might tell a younger Stroud to have read earlier?
other than the Bible.
Yeah, yeah.
Yeah, I think the one me and my brother always talk about, I think it's pretty foundational, is there's a book called Mindset by a lady called Carol Dweck. So she's a behavioral psychologist, and I think she wrote the first book or the first paper on growth mindset. And I thought it was an interesting book because when you think growth mindset, you immediately think studies, career, work, whatever. But she also applies to other areas of life like relationships, friendships, parenting, all of these other cool areas that I think there's a lot of value in that book. And I guess the core principle is always not viewing failure as something that gets you down, but flipping your mindset to use it view it as a learning opportunity. Yeah.
Yeah. Is that mindset super important for like a VC as well? Like that, like overcoming failure and things like that.
What I think is important in life, but in VC, yeah, you are always failing.
Yeah, okay.
You're losing most of the time, and then you hope to get one success that makes the fund or makes your career or whatever. So
okay, Carol Dweck. Yeah. I've not actually read that book. Okay, I'll give it a look. Any courses you'd recommend? So like study VC, but like, go on. Sorry.
Quickly on if you want to learn about startups, the best book is one called 0 to 1 by Peter Thiel.
Okay. Yeah. We actually mentioned him in the newsletter yesterday because he was the one who first invested in Facebook, no? So
yeah.
So yeah. Okay.
Yeah. And sorry, if you want to do VC, there's this guy called Sebastian Mallaby who spends 5 years researching a sector. So he wrote something on hedge funds, but he just released something called the Power Law, the Art of Venture Capital and Disruption. It's a really good history of how VC evolved from the 50s.
And it's something
onwards.
what people even like undergraduate level and stuff could read.
Yeah, it's very accessible. Like the guy went in completely blind into VC, and he's kind of tried to make it accessible. So
okay, that's valuable. Okay, and then I guess courses or courses, whether they're on YouTube or like professional courses or things like that you think would be helpful.
Professional courses, no. It's very like vocational. When I joined, my boss said to me, "This is an apprenticeship. View it as an apprenticeship. You're not going to become good by reading things.
Right.
You need to go through cycles. You need to have experience with companies.
Okay.
So don't expect to like know it all very quickly.
Yeah.
In terms of courses, Future VC, Diversity VC, there's these kind of official programs. I think a guy called Brad Feld does something online. It's free called Venture Deals. There's a course. Helps you through the basics.
That'll be on like YouTube and things.
Yeah, or just on their website.
Other
than that, just scanning TechCrunch and Hackanoon and all these kind of
just like sorry, there's a really good newsletter called The Business of.
Yeah, that as well.
But it's just
that should be number one.
I guess it's being more like commercially aware, no, like of like what's going on, because that is what you're doing is you're spotting that could really disrupt industries. And you have to have an idea of the industry in the first place.
Yeah, I think there's probably two things there. One, spot on. If you're a generalist investor, you need to be spanning and straddling all markets. And so like just getting that volume of information coming in and over time you'll learn patterns and be able to spot what's good and what's not. The other thing is, as a younger investor, or even as a younger person,
Yeah.
I think you've got to find your thing early on, or try as hard as you can to find your thing. And so by reading all of these different ideas, maybe you decide actually healthcare is what I'm really passionate about working in. Maybe it's food delivery. Maybe it's how to make factories digital. Any of these things, but you can only learn that by reading like an article and going down that rabbit hole.
Okay, clear. Any personal skills or other skills you think are really important to develop that you would tell young old Alex when he was 18, I could have like focused on this a bit more?
Yeah, I think storytelling is big. And actually, when it comes down to it, life is all about storytelling. I'm still not good at it. I'm still trying to like work on it, but how to be practical. Actually, back in the day at school, this may be good. I don't know if Mr. Flaherty is watching, but do you remember we used to do those Oxbridge sessions?
Yeah.
Where they try and prep you to talk about a subject you're passionate about.
Yeah.
You'd have probably 50 people in a room. Mr. Flaherty would call on any one person to come up and just talk for 3 minutes uninterrupted.
Yeah.
Unbelievable exercise. I absolutely hate it. Clammed up at the thought of it.
You know what's really interesting is last week also said public speaking, and he said even if it's like a couple of minutes or 10 minutes doing a talk somewhere for the first time, that is something he would have gone back and done. So isn't it really interesting? Like, I think we all see, I mean, any company, any kind of work you're doing, you're selling. Like the storytelling aspect is super important.
Yeah. And storytelling, get up in front of people. And I think that will allow you to understand what you're actually passionate about, because if you're not passionate about it, you can't talk about it. I would say also everyone is trying to work it out. So ask stupid questions. I always get into, especially early on, I was like, I can't ask this question to his founder. He's going to think I'm an idiot. But the reality is, like, if I don't understand it, what am I even doing here?
100%.
And then maybe I'm trying to write things down more. I think that's a good skill. Yeah.
Okay. Interesting. Okay, mate.
You must know this when you're writing your newsletters. Your first draft must be shocking, at least at the start.
No, it's true. And actually, again, it's you learn from experience, because in equity research, my boss used to he would write out bits very like not complete, and then like he would have like so many X's. He would put like insert picture or chart of this. So it's just like you said, like writing down what's on your mind, and then it will develop over time. Okay, last kind of question. VC, I always find this interesting. If not VC, what other careers would you pursue?
Is this me as an 18-year-old or me now?
You now.
Me now. I'd join a startup. One, hands down. It's probably the only thing I'd do. Yeah.
And okay, now going back to 18, how would you have gone about doing that? Would you have still gone to HSBC, done like, or maybe not HSBC, or maybe M&A? Would you still?
I have quite a controversial view on this. I'm actually not sure it's probably best to err on this frame if it's going to students.
You're gonna say I wouldn't have gone to university, innit?
Yeah, and I probably wouldn't. And I don't think university is fit. Like, think about my 3 years at university. Unbelievable for like character development, for making friends, for growing up. But the content I learned is not largely applicable to what I do now. And I mean, if you know you like technology, if you have some inkling of a sector or an idea you're passionate about, just go and join a startup, and that 3 years you'll learn so much more, I think. But
no, I think that's fine to say here, even if there's school students and university students thinking, why not they've joined university, because that's your point of view. That I 100% would still have joined university. I mean, you're speaking to someone who can't stop doing degrees. like I think there's loads of value in like getting the qualifications and going to these places and things. It depends what you're trying to end up on. So like, I mean,
yeah, exactly. I think it's ultimately where the university was a passport to get it. I would never have got into HSBC. That would never have got me to where I am now. So my
although now
journey,
there are apprenticeship schemes now.
Okay, fine. But I don't think if I hadn't gone to university, I wouldn't have made it to where I am now. I think that was all part of the journey. But But yeah, I think the game has changed, and if you want to be in technology, particularly,
Yeah,
either
yeah,
go study. Actually, you can go study computer science if you want to be a coder. If you want to be on the commercial side of technology, I would just
yeah.
get into a startup as soon as possible.
Okay. And actually, we're going to be
And
speaking to a software developer in a couple of weeks, and that'll be an interesting point of view, actually. But yeah,
yeah, and aspirationally, I always like the idea of being a filmmaker or a documentary maker.
mate, you look like a filmmaker at the moment, to be honest.
Watch this space. I'll be making a film about you and your newsletter becoming $1 billion company.
Nice, mate. Stroud, that's all I say. Really appreciate your time, and hope that's not been too onerous for you. And yeah, I'm sure this will hopefully help a lot of people. So I appreciate it.
Always a pleasure. Hopefully something in there is helpful to someone, and happy, my DMs are open on LinkedIn if people want to chat.